Good morning. This is Muhammad Sulaiman, Assistant Professor of Commerce, MVS Government Degree College, Autonomous, Mahbub Nagar. Today, let us learn Accounting Standards Board. As all of us know that every company prepares its annual report at the end of the financial year, which comprises the profit and loss account, which shows the profit or loss earned by the company for the year, and a balance sheet which shows the financial position of the company on a particular date. In order to prepare the financial statements, every company follows certain accounting standards. Having known accounting standards, it is important for us to learn about the role of accounting standards board, which formulates different accounting standards from time to time according to the situation. Hence, every country will prepare its own accounting standards which suits the business environment in that particular area. If we take the example of any country, every country will have diverse business environment. Hence, according to the need of the business environment, every country prefers to formulate the accounting standards suitable to the business environment. Now, let us see the objectives of the lesson. In this lesson, we will be able to learn about the introduction to Accounting Standards Board, the composition of Accounting Standards Board, functions of Accounting Standards Board, procedure of standard setting by Accounting Standards Board, and applicability of accounting standards in India. If we observe, accounting is practiced in our country since olden days. Since a long time, accounting was practiced by various business houses individually. Of course, there may not be a practice of accounting standards, but every business house used to record the accounts in order to know whether they have earned some profit or not. After independence, in the year 1977, on April 21, the Institute of Chartered Accountants of India constituted the Accounting Standards Board, and the primary duty of the Accounting Standards Board is to formulate the accounting standards. Moving further, let us see how the composition of Accounting Standards Board is made of. If we observe the composition of Accounting Standards Board, it provides opportunity to include all the stakeholders who are having stake in the process of formulation of accounting standards in the country. If we see one by one, we can observe that there is one council in the Institute of Chartered Accountants of India, and the elected members of the Council of Institute of Chartered Accountants of India are included in the Accounting Standards Board, which has the responsibility of formulating accounting standards. Then, in order to include the other stakeholders from various government departments and professional bodies, nominees from various sectors will be included. If we C. A nominee from the company affairs from the central government will be nominated on the board of accounting standards who will represent the department of company affairs, and one more nominee from the office of comptroller and auditor general of India will be representing the CAG office of government of India. And in order to give an opportunity to the taxation, being a nominee from the Central Board of Direct Taxes of the central government will be placed in the Board of Accounting Standards or Accounting Standards Board. Then, in order to provide the representation of professional bodies in India, like the Institute of Costs and Works Accountants of India and the Institute of Company Secretaries of India, a representative from these institutes will be nominated on the Accounting Standards Board. So, likewise, one representative from ICWAI and one representative from ICSI, Institute of Company Secretaries of India, will be nominated on the Accounting Standards Board. Moving further, in order to provide an opportunity to the industry, representatives from different industrial associations will be placed on the Accounting Standards Board. For example, the Associated Chambers of Commerce and Industry, ASSOCHAM, one representative from ASSOCHAM will be nominated on the Accounting Standards Board, and one representative from the Confederation of Indian Industry, CII, will be nominated, and one representative from the Federation of Indian Chambers of Commerce and Industry, FICCI, will be nominated in the Accounting Standards Board. Likewise, if there is any requirement to nominate one more representative from any other industrial associations, an opportunity will be provided to nominate one representative from that concerned industrial association. After nominating the representative from the industries, then representatives from various apex bodies or organizations in India will be nominated on Accounting Standards Board. For example, a representative from the Reserve Bank of India will be nominated on the Accounting Standards Board. And if we move further, we know that there is one board called SEBI, the Securities and Exchange Board of India, which regulates the capital market and money market in India and issue and buyback of shares in India. The Securities and Exchange Board of India, one representative from the Securities and Exchange Board of India will be nominated on the Accounting Standards Board, and one more representative from the Customs and Excise Wing will be nominated. Then, in order to provide an opportunity to academic institutions also, one representative from universities and one representatives from institutes of higher learning like Indian Institute of Management will be represented on the accounting standards board. And in order to have the representation of various financial institutions in India, a representative from financial institutions will also be nominated. And as per the requirement of the situation, if any other body is to be represented or it is considered to be appropriate for nomination on the accounting standards board, it will be taken up and the representative of that particular uh, body or organization will be nominated on the accounting standards board. Having known the composition of accounting standards board, now let us move further in knowing the functions of the accounting standard board. What are the main functions that the accounting standards board looks into it, or what are the main objectives that the accounting standards board will take up? As discussed earlier also, the main function of accounting standards board is to formulate the accounting standards. In order to formulate the accounting standards, the accounting standards board shall identify and suggest the areas in which the new accounting standards have to be developed. As the business environment is dynamic and situations change nationally as well as internationally in the business area, in order to in order to accommodate all such developments, if there is any requirement to develop a new accounting standard, then the accounting standards board will identify such development and will suggest for development of new accounting standard in that area. Likewise, one more function of accounting standards board is to review the accounting standards issued earlier from time to time, because an accounting standard issued in the year 1996 or an accounting standard issued in the year 2000 may be relevant by this time or sometimes may not be relevant by this time after a decade or 2 decades. Sometimes it might require some revisions, or it might require some modifications, or it might require withdrawals also. If there is no such practice which was earlier in accounting, in the area of accounting, in such a case, the accounting standard is not required or the accounting standard is not practiced. To identify such developments, to identify such new changes, the review of the existing accounting standards is needed. Hence, another important function of accounting standards board is to review the existing accounting standards from time to time and to suggest for revisions or for some changes or updations. Then one more function of accounting standards board is to provide interpretations and guidance on the accounting standards issued by it. In certain situations, there may be a demand, or there may be a query, or there may be a doubt in one particular area or in implementing one particular accounting standard. In such a case, the stakeholders will write to the accounting standards board for clarifications. In response to such questions, the Accounting Standards Board is supposed to provide interpretations and guidance on the accounting standards issued by it. Otherwise, the implementation of accounting standards or the successful practice of accounting standards issued by the Accounting Standards Board will become difficult. For that purpose, the Accounting Standards Board will provide guidance as well as interpretation on the accounting standards issued by it from time to time. Moving further, we can see one more function of the Accounting Standards Board is to involve in the standard setting process taken up by the international professional bodies. At international level, at international level, there are some professional bodies like International Accounting Standards Committee (IASC), which tries to formulate the accounting standards suitable across the world and will take the help and will take the participation of the standard setting bodies across various countries. In such situations, the Accounting Standards Board of India will take an active part or participate in the standard setting process taken up by the international standard setting bodies and will submit the consultation papers, drafts, or any suggestions or any submissions for the process of setting of the accounting standards at international level. So this is one more function of the Accounting Standards Board. Having known the functions of Accounting Standards Board, now let us move further and see how an accounting standard is set or what is the procedure of setting the accounting standards or how the accounting standards are set. So it is a detailed procedure wherein the accounting standards are prepared and accounting standards are finalized and issued for the implementation by different accounting professionals. Let us see one by one. The first step for setting the accounting standard is a recommendation of the accounting standards by the Accounting Standard Board. So this is a first step for standard setting. The Accounting Standard Board will identify the broad area in which the accounting standard is to be formulated, or there is a need to develop a new accounting standard in that area. Due to the latest developments or changes that come in the business area or in the accounting area, which require or which demand a new accounting standard, such area will be identified by the Accounting Standards Board, and the Accounting Standard Board will recommend for the development of a new accounting standard in that area. After the area is identified, a study group will be constituted. A study group with few members of the Institute of Chartered Accountants of India and any other person who is included in that study group will study the need and requirement of issue of new accounting standard in that area. For that purpose, the new accounting standard shall be prepared in the form of a draft. Likewise, a new accounting standard will be prepared in the form of a draft and submitted to the Council of Institute of Chartered Accountants of India for their comments and for their suggestions. After the submission of draft to the members of Council of Institute of Chartered Accountants of India, the Accounting Standards Board will conduct a meeting with the representatives of different stakeholder groups or different groups. After the conduct of meeting of different stakeholders and different bodies, and on the basis of the comments received from the council members, the board finalizes the draft, and the draft is placed for the comments from the public. It will be communicated in the form of a communication in the journal, or if required, direct communication to the members, or if required, a communication to the members in the form of a written communication seeking their comments, seeking their suggestions for further improvement. Certain time will be given for the purpose of providing of comments by the different stakeholders. After the receipt of comments from various stakeholders and received from various areas, the draft prepared by the Accounting Standards Board will be finalized, and it will be submitted to the Council of Institute of Chartered Accountants of India for consideration. Later on, the members of Council of Institute of Chartered Accountant of India will take into consideration the feedback given by the members on the draft, the comments given by the public on the draft, and suggestions given by the members or public for further improvement. Then finally, the final draft will be prepared by the board, and the final draft will be prepared in consultation with the Council of Institute of Chartered Accountants of India. After the preparation of final draft of the new standard, the Institute of Chartered Accountants of India and the Accounting Standards Board will formulate the new standard, and the new standard is submitted to the National Advisory Committee on Accounting Standards, which is under the Ministry of Corporate Affairs. The National Advisory Committee on Accounting Standards, NACAS, is a committee which is functioning under the Ministry of Corporate Affairs, and which reviews the accounting standards formulated by the Accounting Standards Board of Institute of Chartered Accountant of India. Then the NACAS will review the situations which gave rise a need or demand for development or for developing a new standard, and the formulation method adopted by the standard setting committee and the constitution of study groups, how the members were constituted, and preparation of drafts and circulation of drafts and finalization of drafts. After reviewing all these steps, the National Advisory Committee on Accounting Standards, NACAS, if satisfied, will recommend the new accounting standard to the central government for notification. In this process, if NACAS feels necessary, it may bring or it may do some modifications or updations also. After NACAS is satisfied on the accounting standard, then the accounting standard will be recommended to the central government for publication of the new accounting standard in the official gazette and implementation. Then we come to fourth step, that is notification of accounting standards. After the recommendation of NACAS, the central government will publish the new standard developed in the official gazette, and the date of issue of the new accounting standard will be announced. So this is the process of issue of new accounting standards. So likewise, the Accounting Standards Board has issued accounting standards required from time to time. Now, let us see the applicability of accounting standards in India. If we observe various business houses or various financial and non-financial institutions in India, we have different types of organizations which are functioning in India, or different types of business houses which are functioning in India. We have large scale industries, we have small scale industries, we have medium scale industries, we have cooperative societies, we have charitable trusts, and we have partnerships, and all these things. So, if we observe the applicability of accounting standards in India is classified according to the entity. The first and foremost classification or the group which is identified is the first and foremost group is companies. If we see the position of applicability of accounting standards in India on the companies, we have two sets of accounting standards here. As all of us know, the entire world is trying to harmonize the accounting standards worldwide by adapting or converging their accounting standards with the International Financial Reporting Standards IFRS. In India also, India converged its accounting standards with IFRS and named it as IND-AS. So IND-AS shall be applicable to companies which fall in the group as notified by the Company Rules 2015. So those companies which fall under this group, the company rules 2015 shall follow the IND-AS, that is the Indian form of IFRS. And those companies which do not come under this group shall follow the accounting standards notified by the Companies Rules 2006. If we go into a bit detail of these two types of accounting standards, the accounting standards issued as per the Companies Rules 2006 are, say for example, AS1, Disclosure of Accounting Policies, which was issued on 1/4/1993, and AS2, that is Valuation of Inventories, which was issued and revised later. Then if we take AS3, the Cash Flow Statement, which was issued on 1/4/2001. So likewise, the accounting standards issued as per the Companies Rules 2006 will be followed by those companies which do not come under the category of companies to follow IND-AS. And other companies, likewise, the companies which fall under the category of Company Rules 2015 shall follow the IND-AS, that is Indian form of IFRS. So in case of companies, this is the applicability of accounting standards in India. If we see the second category is of small and medium enterprises, that is non-corporates. The small and medium enterprises are classified into three categories by the Institute of Chartered Accountants of India. The three categories are put as level 1, level 2, and level 3. Level 1 enterprises are the enterprises whose equity or debt are listed in India or outside India. So these enterprises are called level 1 enterprises, and these enterprises are in the process of listing their debt or equity securities, and these enterprises also carry on insurance business sometimes. So in such a case, these entities are called level 1 enterprises. And the enterprises which are bit smaller than these are called level 2 enterprises. And the business houses having borrowings or public deposits in excess of rupees 1 crore but not in excess of rupees 10 crore at any time during the accounting period are called level 2 enterprises. And the enterprises which do not come under level 1 and level 2 are called as level 3 enterprises. In the process of applicability of accounting standards to level 1, level 2, and level 3 entities, some exceptions are given. Some standards are fully applicable to level 1, some standards are fully applicable to level 2, some standards are fully applicable to level 3 entities. So there are some relaxations given to level 3 entities in the process of implementation of accounting standards. Apart from these small and medium enterprises, SMEs, there are different financial institutions or different organizations in our country which are called as cooperative societies. The Institute of Chartered Accountant of India has explained that the cooperative society is considered to be a commercial, industrial, or business in nature. If it is not, then cooperative society cannot claim exemption from the application of accounting standards. Hence, wherever applicable, the cooperative societies have to follow the accounting standards from time to time. At any point of time, if the activities of the cooperative societies are not commercial, are not industrial, are not of business in nature, then the cooperative society cannot be called as a commercial society. In such a case, the situation is different. Otherwise, if a small proportion of the activities carried out by the cooperative society is commercial in nature or industrial in nature, then it has to follow the accounting standards. There is no exemption to the cooperative societies also from the following of accounting standards. Apart from cooperative societies, we have some charitable institutions also, or charitable entities also. As all of us know, charitable trusts or charitable entities are formed with a non-profit motive. But nowadays we observe different charitable trusts or charitable institutions taking up some commercial or business activities also. In such a case, there is no exemption to the charitable entities also from the implementation or applicability of accounting standards. Even a small a portion or small activity which is commercial in nature will attract the applicability of accounting standards. Hence, the charitable institutions, if they do only service activity, then the accounting standards are not applicable. If they take up some commercial activity or business activity, then the accounting standards have to be followed. Otherwise, the charitable entity will not be called as a service organization. So, if they do only service, then the accounting standards are not applicable. If they do some business activity also, commercial activity also, then the accounting standards are applicable to them. After charitable trusts, we have one more form of business, that is partnerships. As all of us know, partnership is a business which is taken up by two or more persons depending upon the capital requirement, which is established for the purpose of earning profits and sharing the profits or losses in the ratio agreed upon. Apart from partnership firms, there is one more business form of business, that is called sole proprietorship. So it is important to note that the accounting standards are applicable to the partnership firms as well as the proprietorship firms. Here we cannot assume that the partnership firms and the proprietorship firms, being small, do not require to follow the accounting standards. It is not like that. However small or however big, the partnership firm and the sole proprietorship firm shall follow the accounting standards which are applicable to them. Having known the applicability of accounting standards in India, it is important to know as to how the applicability of accounting standards is important in bringing up good corporate reports. It is known very well that the corporate reports are a means of communication given by the company to its various stakeholders. Various stakeholders of a company include investors, creditors, bankers, government authorities like taxation authorities, etc., who take decisions or who follow the reports given by the companies. The financial statements provided by the company will form a basis for making decisions by different organizations. So, in order to provide a good, true, and fair view of the financial position of a company, applicability of accounting standards is highly essential. If we see in India, the latest Companies Act 2013 and the Institute of Chartered Accountants of India, with its guidelines and circulars issued from time to time, and the Department of Companies Affairs will see that the accounting standards are implemented in India. As all of us know, ICAI, the Institute of Chartered Accountants of India, is not a regulatory body. Hence, it cannot mandate or it cannot strongly enforce the accounting standards. Hence, the applicability of accounting standards and the implementation of accounting standards is to be seen that the companies are following the accounting standards scrupulously. At this juncture, it is important to note that the central government has powers to prescribe, in consultation with the National Advisory Committee on Accounting Standards, that the companies shall follow the accounting standards issued by it without any deviation. And further, it is important to note that the Accounting Standards Board, which works under the Institute of Chartered Accountants of India, has the responsibility of preparing the accounting standards and recommend those accounting standards to National Advisory Committee on Accounting Standards. In this process, the help of various apex organizations like the Reserve Bank of India, the Insurance Regulatory and Development Authority IRDA, the Securities and Exchange Board of India, and the income tax authorities and all such other relevant authorities is taken, and the directions are taken from time to time in preparing the accounting standards which suit the need of all stakeholders in the society. Hence, it is important to note that the Accounting Standards Board has a great role to play in preparing the accounting standards and to harmonize the diverse accounting policies and practices which are prevailing in the country. And it is to repeat once again that the basic objective of accounting standard is to prepare and recommend the suitable accounting standards that suit to the particular situation. So for this purpose, the Accounting Standards Board identifies the areas in which the accounting standards are to be developed, and it will recommend the broad area where the accounting standard is required. And after the identification of broad area, the study groups will be constituted which will uh, conduct a study on the need of the development of new accounting standard, and with the issue of a draft to the members, with the issue of a draft to the various stakeholders, the comments will be taken up, the suggestions will be taken up, and the feedback will be considered from various stakeholders for the purpose of inclusion in the draft of the new accounting standard. And later on, the draft will be finalized, and after the draft is finalized, the modifications to the draft are made in order to make it suitable according to the changing times. And after the draft is finalized and approved, the Government of India will issue a gazette notifying the issue of accounting standards. Thank you.